So what happens to my credit if I stop paying on my loans in California? Well, I'm a broker and an attorney. My website's upsidedownrealestate.com. And when I advise clients on this subject, I look at it from three angles with them. I'm like, well, if you're going to stop paying, which I don't always advise you to do, when you start paying, you're going to start getting dings on your credit. Those late payments impact your credit score, and your credit score bounces around, and it's very hard to predict what's going to happen. I mean, we've got numbers, and you can say, well, usually you get hit this much, but everybody varies so much that I didn't even have a rule of thumb for people. I've just said you could get hammered even though you've got great credit otherwise, and sometimes you might not get hammered when you should. It's just very hard to predict. And then secondly, the very important part of this is when you do a loan workout, whether it's a short sale, a deed in lieu, or short pay, what mark are you negotiating for on your credit report at the end of the workout? I will tell you most of the time, almost all the time with short sales, with realtor negotiated short sales, the lender is going to say legally settled in full, but for less than the full amount. It's called a Metro 2 remark, and it's a signal to any other lenders in the future that you did a short sale, or you did a short pay, or it's a similar remark to a foreclosure remark. And it's up to the lender to decide whether they want to consider your short sale better than your foreclosure. It's not automatic. As we saw in the last go around, in the beginning, people with short sales on their record were getting to borrow within 2 years. But towards the end, it wasn't much different than a foreclosure remark. So it's varied. So I look at it from the credit score, from the final remark. And I will say this, it's very negotiable in the beginning. Right now, we have a very long foreclosure timeline in California. You've got a lot of laws on your side. And what I wouldn't do if I cared about my credit was just start a short sale and go late. I would try to preset the expectations of the bank and your loan workout terms. And I might start, if you really are concerned about your credit and you're not in a rush to leave the property, I would consider looking at, if I had 2 loans of short pay, or if I have 1 loan, I would definitely consider a deed in lieu. There's a lot of benefits to trying a deed in lieu, and some banks accept them. And if you do the research, you'll see some banks will even let you start the process while you're still current. So, if you're very concerned about your credit, and I'm not saying all deed in lieus get accepted, they don't. But I can say this, in the beginning of the last market, those first year or two before the lenders realized how hammered they were in all the properties, they were doing deed in lieus, and sometimes they let clients do deed in lieus while they were still current, especially if you had a good reason to do it. My name is John McConnin. To find out more, go to upsidedownrealestate.com. Thank you.